Thank you. Welcome back. We're still on the income statement. I needed just to show you one little thing before stepping off the income statement. It was on a situation where either way we've paid more than, and during the course of the period, there was an increase in the item for which we pay. For example, it is possible, or oftentimes you get a situation where they say rent expense. Let's just talk of rent paid. Say rent was paid for 13 months or 1 month in advance. Rent was paid 1 month in advance. And assuming in the trial balance that the amount for rent expense, was say 27,400, and you are told this is for 13 months, and maybe on the 1st of September this was increased, rent was increased by say 10% on the 1st of September onwards. Now the challenge here is to determine, clearly here we've got prepaid expenses. There's an amount that has been paid in advance towards rent, which is a prepaid expense. But how much is it? We need to determine that. And it's not as easy as saying 27,400 divided by 13. This is wrong. You can't do that. Because this 27,000 includes almost about two amounts. For a certain period of time, your rent was moving like this. And from the 1st of September, it went up slightly, and it moved on like this. So it would be wrong if you divide the entire amount with 13 months in order to do it, because we had different amounts during these two periods. So what you need to do for those who are mathematically literate, who understand the mathematics, we need to formulate an equation and say 27,400 is equals to, for 6 months, if our period, this say from the trial balance on the 28th of February 2012, I'll just put it there, on the 28th of 2012, amongst others, it gives you, sorry, rent expense, yes, that amount, that's the trial balance for that period. It gives you 27,400. And on the 1st of September 2011, your rent was increased by 10%. So if you count from March up until, or a date before the 1st of September, which is the 30th of August, you'll arrive at around 6 months. You've got March, April, May, June, July, August, which is for 6 months, pardon me, your rent was X amount. Plus, for 7 months, it increased by 10%. That means for 7 months, it was 7.7x. That means you say from 100 to 110, you multiply this by 7, give you 770. X divided by 100, it will give you 7.7. Right? X. So in essence, 24,000 is made up by 13.7x. 13.7x divided time is equals to 27,400. And if you divide 27,400 by 13.7, it will give you something. Let's get that something. I'm not sure whether you'll be able to see my calculator. It's 27,400 divided by 13.7. Sorry. 27,400 divided by 13.7. That gives us 2,000. That is to say, for the first 6 months of this financial period, we were paying 2,000 per month. Your rent was, that is before this increment, before it went up by 10%. Before it went up by 10%, we were paying 2,000. Now we're told that on the 1st of September, it has increased by 10%. From the 1st of September, how much will we pay? It will be 2,000 times 10%, which is, or rather, 200, and you add the 200 to the 2,000, you get 2,200. Sorry. But you can easily do this. You can easily say 2,000 times 1.1. It will give you straight 2,200. They're using calculators. Don't go this way, getting 10% of 2,200, adding that to 2,000 to give you 2,002. Remember, we don't have time. We must save time as far as is humanly possible. So shortcut, multiply the 2,000 by 1.1. It would give you straight that we're paying 2,200. Right, it means the 2,200 will then be the amount that was paid in excess. Alternatively, for those who are not so much into mathematics, what you can do is, you can say for 6 months your rent was 100%. That gives you 600. Then for 7 months, this 100 went up by 10. 10% was added, that means it was 110. 770. Then add the 2 to give you 13,700. Sorry. And this will be your denominator. If you want to know how much was collected during the first 6 months, you go here, you say 600. That is the first 6 months. This is the last 7 months. 600 over 1370 times 27,400. That will give you something. That will give you, quickly, 600 divided by 1370. Sorry. 600 divided by 1370 times 27,400. That will give you that the rent that we paid for the first 6 months amounts to 12,000, which is correct. If you divide this by 6 months, it will give you that per month we're paying 2,000. 2,000, as we earlier on determined. That we're paying 2,000 earlier on. X is equal to 2,000. Right. And if you want to know how much did we pay, or were we paying per month for the last 7 months, same procedure. Your numerator will be 770. Your denominator remains common, 1370. And you multiply that by, and it will give you a figure there, which is 770 divided by 1370. Sorry, 770 multiply by 27,400 divided by 1370 is equals to 15,400. That's what was collected during that period. 15,400 Indeed, if you add 12,000 to 15,400, it will give you the 27,400 that was collected or that was paid. Now, if you want to know how much was it per month, you divide this by the number of months. Divide this by 7. It will give you 2,200. In here, you've got a number of options, shortcuts. Instead of going all this long route, what you can do, you can straight go here, because what you want to determine the amount received in advance or paid in advance. So go start here straight. And your formula will be 770 divided by 1370 times 27,400 times 1/7, or divide that by 7, because that's for 7 months. It will give you 2,220, because you're looking at this figure. That's what you want. You don't need all that other information. 2,200, and that will be the amount paid in advance, which must be deducted from your rent income. In the income statement, must be deducted from the income statement. This will be deducted from a rent expense of 27,400, to say minus 2,002. It will give you 25,200, which is the amount that was supposed to have been paid in the first place. And this 2,002 will then go to your notes to financial statements. Notes to financial statements. As what? This expense. And this expense paid in advance, we say it is a prepaid expense. Paid before the time. Before the time. Paid before the time. We pay this sometime during the course of 2012, before the end of February, or the end of February, being for next year, next financial period, March. So that's why we've paid in advance ahead of the time. It will go to your notes. And remember, this was said, we have not yet received the service. The service is still to be received. And the service is in essence receivable. This will go to your trade and other receivables. Trade and other receivable in your notes. Or we can say, the landlord owes us 2,200. We have a claim over the 2,200. We can claim it at any time. So the landlord becomes our debtor, which is our receivables. That's another way of looking at it. Okay, I thought I needed to explain this. We can change this and talk about a situation where we have not paid in advance, similar situation, but we've paid less rent than what we expected to pay. Almost same example, rent, but this time around, in the trial balance, rent, you pardon my handwriting, expense appears as 23,000 rands. And under additional information, you are told that 1 month rent is outstanding. 1 month rent is outstanding. It has not been paid. It means it's outstanding. It was due but has not yet been paid. And say, please take note. Again told her, take note that again on the 1st of September 2011, your rent was increased. Say by 10%. By 10%. In this instance, it means there is a shortfall here. We've paid up until somewhere there instead of going up there. And it means we've got to add the shortfall. But we need to determine the shortfall. We're not sure how much is it that we owe, that we have not paid. You know, we can't divide the 23,000 by 11 because the payments were not equal during the period. They started moving like this, And somewhere along the line, they again went up. They again went up by 10%. So the payment was not even over the period. And therefore, it will not be correct for us to divide this by 11 months. What we need to do again is to formulate the equation like I did earlier on. That from March to September, the 1st of March to the 30th of August, your rent was for 6 months. It was X amount that is unknown. And for the last 5 months, it was also unknown. But there was a 10% increase, which translates to 5.5. It was 5% increase, 5.5x is equals to 23,000. So which gives us 11.5x is equals to 23,000. Then you divide 23,000, therefore x is equals to, if you divide 23,000, divide 23,000 by 11.5, it will give you 2,000. That for the first 6 months of the financial period under review, we've been paying 2,000 per month. So for 6 months, we've paid basically 12,000. Right? But we're not interested in this as such. We're interested, and this 2,000 was increased from the 1st of September by 10%. So it's 2,000 times 1.1 or 1.10, which will give us 2,200. Can go the long way to say determine 10% of 2,000, which is 200. Add the 200 to 2,000 will give you the same answer. But it's rather a long way of doing things. Alternatively, you can do it this way. Say, for the first 6 months, it was 100, which gives us 600. For the last 5 months, it was increased by 10%, which gives us 110. It's 100 plus 10, 110, 550. And then the sum thereof is 1350. Now, if you want to know how much is outstanding, I said earlier on, just go direct. Just go direct. It helps to go direct. It saves time. You can easily say 550 divided by 1350 times 23,000 times 1 over 5, because this is 5 months. Then we'll get the direct answer. Let's check what is that direct answer. 550 divided by 1350 times 23,000 divided by 5. Yes, give me now. Let me start here. Hey, this is not 13. 05 is 11, sorry. They should read 11. It's 1150, not 1350. This is 1150, not 1350. Okay, pardon me. So it's 550 divided by 1150 times 23,000 divided by 5. That gives us 2,200. It's very direct. That is, this is the shortfall. This is the amount that was not paid, that was supposed to have been paid by the end of the financial period under review, but unfortunately it was not paid for whatever reason. What you need to do in adjusting, you will then add this to your rent expense amount. That means it will appear like this in the income statement. In the income statement, and expenses or operating expenses, rent expense, 23,000 plus, because there's a shortfall, 2,200, giving us 25,200. Right, that's how it will appear in the income statement. And remember, the 2,000 I said earlier on, it is a an amount that must go to your notes, or it's a balance sheet amount, or this adjusting amount must go to your notes, an adjusting amount that must go to the notes. And you must come up with an account here. And that account's name will have the term expenses, because we're dealing with expenses here. We'll have expenses in it. Now we want to check what kind of expense is this. Has that been paid in advance, or is it outstanding? This is outstanding, this is accrued. It's outstanding, and we say it is an accrued expense. Or this expense has still not yet been paid. We used to talk about expenses payable in the past. It's an expensible payable account. And it will go to your note, trade and other payables. Trade and other payables. Another way of looking at it, this 2,200 rands is owed. It's owed to somebody, to our landlord. And in accounting, we refer to a person, the person that you owe. We refer to that person as your creditor. That is where this will go to your payables. That's another way of looking at it. But the fact of the matter, this has not yet been paid. It is still to be paid. It is expenses payable. That is the reason why it will go to trade and other payables. Right. I think we've got to move on. I thought I need to explain that because I realized in the past that a number of candidates got problems determining these things. Determining rent paid in advance or accrued. Let us resume. I thought I needed to explain that. Let us move on to the balance sheet. The balance sheet, please, again, it's about the format of the balance sheet, which by now should be common knowledge to all of us. Notes to financial statements. Remember that notes to financial statements largely form the balance sheet. If you've got the notes correct, you've got a balance sheet almost. So it is important that when you work out the notes, you work them correctly. Where notes are not required, you will be expected to show calculation on the face of the balance sheet. And this should not be a problem as well. We had this kind of situation, I cannot remember, I think it must have been last year, and in 2010, where candidates were not asked to prepare were asked to prepare the balance sheet without showing notes, but showing calculations in brackets. Please, it is important that you do so. We're not required to show calculations brackets. This ties up with the bullet, the preceding bullet. In some instances, you may be given an incomplete balance sheet or information in the balance sheet. What you need to do, you have to consider additional information. At times, you may even be given a ratio or ratios, and you should be able to work out something to incomplete in the balance sheet. Just to cite one example amongst others, you may under current assets, or the examiners may, in the current assets, for example, leave out an amount for one of the current assets items, inventory or trade and other receivable, anything, and they give the ratio, the current ratio, for example, which is current assets to current liabilities. And we've got the current liabilities there, you should be able to work out the missing figure, etc. Transfer a short-term portion of the fixed asset or loan. Please take note. Where the loan, or where the fixed deposit matures within a year, or where the loan is payable within the year, you need to deduct the portion of the fixed deposit from the fixed deposits, right? And that portion that you've deducted, that matures, that is going to mature within a year, it will form part of your cash and cash equivalents. It must be added. It must be included with your cash and cash equivalents. The same can be said of loan that's maturing within, or part of the loan that's maturing, that's payable, within a year's time. That must be deducted from your loan under non-current liabilities. And it may be shown separately under current liabilities as a short-term loan. In some instances, it may be included with your creditors, may form part of your creditors under current liabilities. Bank overdraft, please take note that this must be shown separately under payables in the balance sheet. Ratios, analysis, interpretations. I've talked about this earlier on, that you need to calculate and comment. In doing so, what do you need to do? Know your formula by heart, what the ratio seeks to measure, compare your calculation with the given ratio, oftentimes your given financial indicators. You'll find that they may be required to calculate net asset value per share, and they're required to calculate, to comment on it. In doing that, compare it with the past years and other related items, or other related financial indicators. In doing the comparison, I suggest that you state whether it has improved or deteriorated or declined, quoting figures alongside, and express an opinion. I've said this earlier on. Just for the sake of emphasis. On the cash flow statement, the format again is important, that to understand the format of the cash flow statement, those three sections. It is also important that you understand, you know your cash generated from operations note, often referred to as a reconciliation between net profit before tax and cash generated through operations. It is important. That note carries lots of marks whenever it is asked. And the top part of it, which consists about three things: net profit before tax, to it you add depreciation as well as interest expense. There are just no brackets up there. Don't even think of bracketing any figure there. There are three things: net profit before tax, depreciation, and interest paid. And that will be followed by changes, of course. It is cash, what do they call it? Operating income before changes in working capital, followed by changes in working capital, where of course the focus is on current assets. Three items only. You're looking at changes in inventory, you're looking at changes in receivables, trade and other receivables or debtors, you're looking at changes in creditors or trade and other payables. Three things only. In determining those changes, starting well with inventories, it is not very difficult to determine that from one year to another. But when you determine changes in receivables, for example, it is important when we are given notes, trade and other receivable note and trade and other payables note. Please take note. Please exclude tax, SARS income tax. Pardon me. Exclude SARS income tax in the trade and other receivables, wherever you pick it up, whether it was last year or this year or in both years. The same with trade and other payables. If you want to determine the movement there and measure the movement of your payables, exclude SARS income tax, exclude shareholders for dividends. It is very important that you exclude those. And also should think interest, if there's any accrued interest and so on, because these are used in determining in the calculation of taxation paid as well as dividends paid. Right? It is important that you do that. But somebody will elaborate on this at some point in time during the course of this week or next week. I'm just giving the highlights, things that you've got to take note of. I just want to pause for a while because I've got a question here that I need to answer. I'll come back to this. There's a question coming here to say, how did we get that particular 7.7 x and 5x? That's a question. I think I need to go back to that, or I will handle this question immediately after my presentation. I'm taking note of it. Let me finish this. I've not forgotten about the question. I'll handle it immediately thereafter. It's noted. Calculation of interest paid, taxation paid, and dividends. Very important. You must be able, the candidates must be able to calculate this independently or as separate items. You know, maybe starting with taxation paid, like I've said. With taxation paid, the straightforward one will be dividends paid for starters. You know, you always owe SARS, I mean the shareholders. To it, you know that you add amount in the income statement or in the notes, and the deduct amount at the end of the year. But with taxation paid, please be careful, because with SARS income tax account, the account may have either a debit or a credit balance. We may, what I mean to say, what I say here, we may owe or we may be owed by SARS. So you must go a bit careful there on the calculation of the taxation paid. You don't always add it to the amount in the income statement. You may have to add it at some point, and at other times you may have to deduct it. Well, of course, where we owed SARS at the beginning of the period, you can add that to what you call to the amount in the income statement. But where SARS owes us, you must deduct it. We must deduct it. No. And at the end of the year, where we owe SARS, you know, where we owe SARS, we must actually deduct, of course, the amount that is owed to SARS at the end of the year, because that is the amount hasn't been paid. But where he owes us, it means we have overpaid. We must add it to determine the amount paid. I'm not so sure whether I need to explain this. I think at this point in time, I need just to quickly explain this. Pause for a while just to explain this question of taxation, because it can be sometimes a bit tricky. Look, if, say, for example, if this is your trade and other receivables, you've got the 2011 and the 2012, right? SARS income tax. 5,000, nothing here. That we have trade and other payables. SARS income tax 2,000. Right, nothing here. And again, let us assume that in the from the extract or in the income statement, income tax is 50,000. Right, this comes from the income statement. You are now to determine the amount paid to SARS, or the amount of taxation paid. Now, I think simple logic would say this 5,000 at the beginning of the year. The question is, was it owed to SARS or was owed by SARS? The 5,000 was owed to us. SARS owed us. Now, according to the tax assessment for the current year, we're supposed to pay 12,000. I mean, we're supposed to pay 50,000. If we were to settle the score between ourselves and the South African Revenue Services, how much are we supposed to pay SARS? Logic will say, look, he owes us 50,000. According to the tax assessment calculation, we're supposed to pay 50,000. If we're to settle this, we're supposed to pay SARS 45,000. Or we can put it this way. He owes us 5,000. We are to pay him 50. If we're to settle the score so that we are at 0, we say the assessment amount 50 minus 5 is 45,000. If we give SARS 45,000, then we'll not be owed SARS. We'll be owed 0. Right? Right, that's the first point. But let's continue. But according to this information, we still owe SARS. We now owe SARS. We now, according to this information, at the end of the current year, we owe SARS 2,000. The question is, how much did we pay SARS? By right, if we were to settle to come to 0, we were to pay SARS 45,000. But the fact that we owe SARS 2,000, it means we did not pay the full 45,000. We paid 45,000 less 2,000. We paid 43,000. Simple as that, no? I want to avoid this question of amount owing at the beginning of the year, amount in the income statement, amount owing at the end of the year. It can be confusing. Let's reason it out easily, simple. SARS owed you 5,000. The assessment or tax calculation puts us at 50,000 that we've got to pay. And clearly, if you're to settle this account between ourselves and SARS, we've got to pay SARS 50,000 less 5,000. That means we've got to pay him 45,000. But according to the information, we still owe SARS 2,000, which therefore means we have not paid 45,000, but we've paid an amount less than 45,000, which is 45,000 less 2,000. An amount less than, that's 2,000 less than what we're supposed to pay, which is 43,000. This is what will go to your cash flow statement. We can change this again. We can change and have let us have a situation here. Let's forget about this and bring this 2,000 here and nothing here. Did SARS not this? There's nothing under trade and other payables. P is for payables, and we've got this situation, new situation, and the calculations. Tax calculation of assessment says 50,000 must be paid. Now the question, how much did we pay SARS? According to the calculation, we're supposed to pay 50. SARS owed us 5,000 at the beginning of the year. And at the end of the year, that is after paying SARS, whatever we've paid, SARS still owes us 2,000. Again, logic will say, look, it's 50,000. Minus 5,000, if we were to settle things between ourselves and SARS, we're supposed to pay 45,000. But it turns out that SARS still owes us 2,000. What does this mean? It means we must have paid. It means we must have paid more than 45,000. 2,000 rands more than this amount. So what you need to do, you add the 2,000 to determine how much did you pay to SARS. 47,000. That's it. That is why SARS still owes you. We have paid 47,000. This will go to a cash flow statement. You see, you can play around with this. You can play around with this, no? Let's make it easy and avoid this root kind of things. Amount owing at the beginning of the year, amount owing in the income statement, amount in the income statement. It can be confusing. Just reason it out. SARS owed you this, or you owed SARS. Calculation says, tax calculation puts us at 50. If you're to settle, how much are we supposed to pay? Right? And if there's still something owing to you by SARS, it means you have paid more than. That amount plus what was supposed to have been paid will give you the amount that was paid. Okay. So this one is important that I explain it. I hope you understand it well. Well, with dividends paid, it's very straight. Obviously, it will always be the amount owing plus the amount in the notes. You add the two separate amount owing at the end of the year. Now, because you always get this located under trade and other payables plus your notes, which is retained income note mainly. You'll get that from the retained income note, your dividends in the financial statements. Please take note when determining the interest paid. It does not have to be the same. The interest paid that is shown in the cash flow statement does not necessarily or may not necessarily be the same as the interest paid as shown in your reconciliation between net profit before tax and what have you note. It may not necessarily, especially when you have interest expense outstanding from the previous year, accrued interest income or whatever, or prepaid. Now, we must just be on the lookout so that we determine correctly the amount of interest paid. I think the same procedure as in the case of calculating taxation paid will apply in the case of determining interest paid. You follow the same procedure. Just be on the lookout whether there's no interest accrued in the additional information that you're given. If there's any, it means then the amount of interest in the note will not be the same as the amount of this interest paid amount in the cash flow statement. They'll certainly differ. They'll certainly differ. Right. I think, sorry. We can resume our discussion. The use of brackets, this should also not be a problem. Just check, all what you need to understand is the relationship between cash and assets. I'm talking of assets, I'm talking of all sorts of assets, be non-current assets, be current assets. The relationship between cash and current assets, and assets generally, it's a negative relationship. The two are negatively related, for they move in the opposite direction. Just to cite one example, I take a trading stock. If you've got 50,000 rands, and you take part of the 50,000, so you take 30,000, go buy stock. You have 50,000 rands, and with zero stock on the one hand. You take 30,000, go buy stock. What's going to happen to your stock? Your stock will move from 0 to 30. What happens to your cash? From 50 to 20. When the stock goes up, the cash will come down. When stock increases, your cash decreases. And if you sell this stock, as you sell the stock, it will gradually come down. The value of stock will gradually come down. And what happens? You receive your money. What happens to cash? As you sell, you receive money, your cash will go up, your stock comes down if you don't replenish. Can you see? So the two are negatively related. This is representative of all sorts of assets. You can talk of vehicles. You buy a vehicle, it's a fixed asset. Your cash will come down, the value of your vehicles will go up, or your assets, fixed assets, will go up. And if you dispose of that vehicle at some point in time, you're going to receive money. Your cash will go up, your value of your assets will come down. So that is why we say what you call here, the relationship between cash and assets is a negative relation. The two are negatively related. That should guide you when to use the bracket. Once there is an increase in an asset, be fixed, be current. An increase in an asset means a decrease in cash, bracket the amount. If there's a decrease in an asset, be fixed, be non-current, be current. If there's a decrease in asset, it means increase in cash, therefore don't bracket. Was the relationship between cash and liabilities? It's just the direct opposite. The two are positively related. They move in the same direction. They move in the same direction. To cite an example, You owe nobody any loan, zero. So far as loans are concerned, got zero loans. You go to the bank, you negotiate a loan for 50,000 rands. What happens? You get 50,000 rands, your cash goes up. What happens to your loan liability? It goes up. You also loan, no. And with time, you decide, all right, listen, let me pay 10,000 towards the loan. What will happen to the loan balance? It will come down. What happens to cash? You've taken 10,000, you've paid, the cash comes down, the loan comes down. So, the two are negatively related, and this is representative of all sorts of liabilities. No. So, cash and liabilities are positively related, they move in the opposite direction. What does this mean in terms of bracketing or not to bracket? It means if there's an increase in a liability account or an owner's equity account, it means an increase in cash, and therefore do not bracket, do not use brackets. If there's a decrease in a liability account, it means a decrease in cash as well. It means bracket the amount, put the amount in the brackets. Right, that's how we use brackets. That's how brackets should be used in the cash flow statement. You know, to avoid throwing away marks unnecessarily. Those are marks that we need to defend by all means. You lose the marks unnecessarily if you don't apply brackets correctly. It is therefore important that you apply amounts correctly. Determining the fixed assets purchased amount. What I've realized over the years, we've got quite a number of candidates battling to determine the correct fixed asset amount purchased. I mean, the amount of fixed asset purchased. What we suggest you do, or what I suggest you do, just draw up a ledger account. It will save you. It will ease your problem. Just draw up the ledger account, just the T account. Draw up the T account to determine that. Like this, for example. If, say, for example, whatever extract are given, be balances, be balance sheet, whatever, you have your fixed assets in that extract. (2011, 2012), 6 million, and this year is 6.5 million, right? And again, you're also given in the very same extracts, whatever extract from the income statement, depreciation, $50,000, $80,000, and other additional information you are told that an old vehicle was sold. Let's make it easy, at book value or carry value or diminished value, if you like, for 200,000 rands. I need to wrap up. I need to move a little bit fast here. So what you need to do, quickly drop the account, take the opening balance. This is the fixed asset account. The opening balance, 6 million. This is the closing balance carried down, 6,500,000. And obviously the closing balance brought down 6,500,000. And then you consider this information, the depreciation, edit, credit this, because this field was depreciated by 80,000 rand, sorry. And of course, we've got this that was sold for 200,000 sales, whatever it is called here. Obviously, that value also declined by that 200 rands of the sales. So this will give you 6.780 million What is the difference? 780 million. So this will be your fixed assets purchased. Fixed asset purchase. In terms of calculation, you can start here. Okay, 6.5 million plus 80 plus 200 minus 6 million. Or you can do 6.5 minus 6 million plus 80 plus 200. You will arrive at the same answer, 780 at the end of the day. You know. So one way of doing it, I see a number of learners battling on this, and these are free marks that we can collect. So that is the reason why I'm saying we need also to attempt the so-called difficult questions, and because there are still marks that we can collect freely there. I don't have enough time. I've got to rush because my time is almost over. And I've got a question that I still have to answer. I'm going to run over this. I'm skipping the types of questions, skills assessed in previous question papers, but I'll run through that. There's nothing left, much left. You've got to prepare the accounts and find, in the types of questions, skills assessed in previous question papers. Prepare accounts and financial statements, calculate or identify figures, analyze financial information. You know, all those are type of questions which, of course, I have sort of covered in the past. In the earlier slides. The general guidance I'm giving to all learners listening to this presentation this afternoon is that please read the instructions carefully, question instructions, establish what is that is required. Don't get into reading the information. As you go through the information, have what is required in mind to avoid going aimlessly through the given information. You're wasting time. Check what is that you are required to do. Check the information, use the information to do just that. Right? Time management. Every question is allocated time and marks. Please try to stay within the allocated time. Please start with the question that you think you understand best and try to work on it as fast as you possibly can to save time. You know? In conclusion, because I still have a question to answer, but let me quickly let me just go through this. Maybe I'll just find time to answer this question. In conclusion, I wish you all the best of luck in the forthcoming examination. And I need also to remind you of our provincial minimum target pass rate. Overall pass rate is 85% for this year. And accounting is expected to contribute at least 75% towards that pass rate. So we cannot afford to obtain anything less than 75%. The worst scenario, or the worst case, could be we can't afford to obtain a percentage less than 72%. Remember, last year we obtained 71.74%. Rounded off is 72%. We cannot obtain anything less than that. Before I thank you for listening and for your time, I have a question that I need to answer. The question is, how did we get that particular 7.7? The 7.7, look, this is how I arrived at the 7.7. For the first 6 months, in that example, your rent was moving, we had an even what's called kind of a payment towards rent for 6 months, which I would say equated to 100. I'll give it 100%, right? Then that is for the first 6 months. Then it went up by 10% for this period of 7 months. So it was 110 times 7, giving us 770. If you divide this by 100, it will give us 7.7. That will be that's 7.7x comes in that way. Right? The same with the 5.5. Same thing. It was for 6 months, it was 100% for 6 months. It went up by 10%, but we made a short payment. Only we paid for 5 months instead of 12, or another 6 months. So it was 5 times 110, because it was 100 plus the 10% given us for that period 110, which is 550. If you divide that by 100, it will give us 5.5, which is 5.5x, because it's a percentage. Right? That is how we arrive at 7.7 and 5.5. Lastly, my time is almost up. My time is up. I honestly want to thank you very much for listening and for your time. I hope you'll make use of these tips and the tricks and loopholes in preparing for the examination. There will be presenters coming after me starting from tomorrow, the 15th, up until the 20th, I think the day before the examination. There's manufacturing tomorrow, the day after tomorrow, stock valuation methods, the 17th bank reconciliation statement, and the 18th we'll have debtors and creditors reconciliation, the 21st cash budgets and projected income statement, the 22nd company ledger accounts, very important as well, the 23rd income statement with notes, 24th balance sheet with notes, VAT the 25th, 26th cash flow statement, the 26th ratio analysis and interpretation, and on the eve, again, some kind of tips. Good luck in our revision. Good luck in the forthcoming examination. Wish you well. Thank you very much. Bye.